Hey, it's James Nicholson and welcome to my YouTube channel. Now, inflation has dropped from 10% to 8%. And in this video, we're going to unpack exactly what that means for property investors. But before we jump into that, make sure that you do smash the subscribe button and hit the bell notification and smash the like button as well, guys. That really helps me with the YouTube algorithm. So, inflation has been a nightmare, hasn't it, for the last few months? And it's really hit everyone really hard, particularly energy costs, food costs. That hits your tenants, that hits you individually, and it just means that we've had the cost of living crisis, as they have called it, for the last year at least now. And it's really been biting hard. So what normally happens when you get inflation, the Bank of England would raise interest rates higher than the inflation amount in order to push it down. However, this inflation isn't normal, and it's come about because of wars, it's come about because of the pandemic, printing all the money and various different reasons. And it wasn't really caused by the consumer as it could be in other times. So the Bank of England took a bit of a softer approach at the start. We've had, I think, 12 interest rate rises now, and they haven't had the desired impact. So what's next? Well, inflation is obviously down. We're at 8% now, but it's still a lot higher, and they were expecting it to go down even more than it actually did. So now they're going to look at it and say, this isn't moving. It's a bit more sticky than we were expecting. And the markets are pricing in that interest rates might go up above 5% now. And so we were looking at interest rates in Liz Truss's government of potentially going up to 6.5%. Now the markets are pricing in that interest rates could go up to 5.5%. That's going to hit everybody really hard. If you've got a credit card, you're going to pay more money. If you've got a mortgage, your interest rate's going to go higher. And that is going to cause a downward pressure on house prices, because that's going to mean affordability is going to be tough. It's going to cause so many different issues throughout the market. Now, the only reason that we might see a delay with the Bank of England making that decision is when they do an interest rate rise, it takes 6 to 9 months before the impact of that is really felt. They don't just turn the interest rates up. Next month, suddenly the house market crashes, or next month people stop spending. It takes a little while to feed through. Federal Reserve in America, they're more likely now to pause interest rate rises. We often copy the Fed, so maybe we will this time, but the market is indicating that they feel that we'll have at least 0.25% interest rate rise in the next meeting. So what do we do as property investors in these sorts of scenarios? Well, I've said this all along on the channel. If you can find good deals, it doesn't really matter what's going on in the market, whether the prices are going up or down. It can actually give you more leverage when you're negotiating. So if you want to buy a house right now, then that's not a problem. You use this information, your knowledge that interest rates are going to go up more, in order to negotiate a better price for yourself. And make sure when you take a deal that you fix the rate with a term that you're comfortable with. So that could be 2 years if you think interest rates are going to go down, or if you feel the interest rates are going to stay high for years, then maybe you fix it for 5 years. And that gives you that certainty. If the deal works, yes, if the rates dropped a lot, you might not make as much as you could, but it gives you that certainty. And that's really important, that you get the certainty in whatever deal that you do. When you have that, you know that you can proceed, and that can be really good for you. Now, the government are also saying that, look, they still expect inflation to drop a little bit more. So they're expecting inflation by the end of this year to hit 5%. That's still quite high, isn't it? And it's nowhere near the 2% target. But 5% people can kind of cope with a little bit better than 10%. And so by the end of this year, if we hit 5%, maybe this sort of stuff is going to start feeding through into house prices and stuff like that. So always use that as a tool to make sure that you're getting a good deal. Now, if you have debt, as in mortgage debt, then this is actually eroding your debt. So inflation is actually quite a good thing for investors that owe money. So if you have mortgages and you owe 100 grand, for example, to a bank, and inflation sits at 5% this year, then that debt in real world terms, in real money terms, is worth 5% less the next year, because the buying power of 100 grand this year will be less next year. You'll be able to buy less with your 100 grand that you would at this time. And so that's a relatively good thing, although it might not feel like it at the time. It is actually a relatively good thing that your debt is getting eroded, because wages will catch up, rents will increase. But all of this pressure that's happening, I think longer term, this is going to be difficult for tenants. I think where we're going to see the difficulty for tenants is interest rate rises. Landlords will need to pass on to their tenants. We've currently got a rental problem. We don't have enough rental stock. We have rising rents because landlords are being pushed out of the market because of Section 21, because of Section 24, all these different problems that landlords have got, EPCs, all these things are pushing landlords out. There is less supply of rental stock than there has been for a long time. Their rates are going up. They're going to pass that on to their tenants. And so that's going to be a story that will develop over this year as well. I think rental prices are going to go absolutely through the roof. If a landlord owes 100 grand, and let's just say they're on a 2% rate right now, means they pay £2,000 in interest over the year. If they now get 5% rate on a renewal, they're going to pay £5,000 in a year, meaning they've paid more than double for their mortgage. That cost is going to pass on to tenants, and that's going to be a big problem with inflation, because of interest rates are going to have to rise to battle this. But let me know your thoughts on what you feel with inflation. Do you think the government should be doing more? Do you reckon they should just whack the rates up? Do you reckon they should let's see approach with what's already been done? It's a difficult one to balance, because it's something that moves so slowly. They turn a switch over here and it takes months to actually get that result to see if it actually worked, if it was too much or not enough. It's very, very difficult to predict. But I'd love to know your thoughts on that. What do you think, especially in relation to the property market, it will do? So do comment below. But yeah, inflation's coming down. I think it's going to be a real problem for renters. I think rents are going to go through the roof. That's my determination from this. But I'd love to know what you think. Do like the video, subscribe to the channel, check out all the other content on my channel, including this video right here.